I know that there's been a lot of talk about how much more interest you pay on a 50-year loan, but in reality, do you know anybody that has stayed in their house for 30 years, kept the same mortgage for 30 years without refinancing, and actually paid it off? I don't know anybody that's done that. The average person stays in their houses for 7 to 12 years and they refinance once or twice within that period. So I don't think that the long-term interest is going to come into play as much as this being a nice band-aid to help people move into, sell their current home and move into one that fits their lifestyle a little bit more better.
Hey, Sherry, thanks for joining me today talking about a hot topic.
Very hot topic, Beth, and thank you for having me today.
Sure thing, sure thing. So the internet heard 50 years and they acted like the sky was falling.
Oh my God, everybody has gone ballistic over it.
They have, I know. But would it help real buyers, the ones struggling with DTI, debt to income ratio, rent increases, high payments? We've got thoughts.
Well, first of all, it's not actually a real thing yet, so we have to wait and see if it's truly going to roll out, and if it does roll out, how is it going to roll out? Are the interest rates going to be the same? Are they going to be different? That's going to weigh into it. But if we just look at it as it'll roll out and the interest rates will be the same or close enough, then I think with any other mortgage financing option, it's going to help some people, and then other people will stick with the 15, 20, and 30 years.
Yeah, absolutely. I think it does depend on their scenario for real. So from the trenches, would a 50-year mortgage help more buyers get off the fence, or does it just delay the affordability problem? I think that's one of the big questions that people are asking.
Well, I don't think that it fixes the affordability problem, but I think that it's a nice band-aid. If you have somebody that's been living in their home since COVID and it no longer meets their needs, and they can move into a home that does meet their needs, I think it's definitely worth looking at, and without jumping their payment up. I know that there's been a lot of talk about how much more interest you pay on a 50-year loan, but in reality, do you know anybody that has stayed in their house for 30 years, kept the same mortgage for 30 years without refinancing, and actually paid it off? I don't know anybody that's done that. The average person stays in their houses for 7 to 12 years and they refinance once or twice within that period. So I don't think that the long-term interest is going to come into play as much as this being a nice band-aid to help people move into, sell their current home and move into one that fits their lifestyle a little bit more better.
Yeah, and then, when in my notes we were talking about a family that was spending potentially $3,200 in rent. If a 50-year term brings their monthly cost down enough to own and start building equity, then that's a win, instead of spending, $25,000 a year in rent, even though they may be paying more in interest, less in principal, especially in the very beginning, before they have a chance potentially in the future to refinance or, change their loan type. At least they're building some type of equity in the meantime.
I agree. And when we look at the average age of the first time home buyer, in years past, it was, 23 to 27 years old. Now it's 37 years old. So the average first time home buyer is between 37 and 40 years old. They've been renting for a long time, waiting to be able to afford a home or to be able to afford the home that they want. So if we can use a 50-year mortgage as a tool to help get them into the home and stop paying rent, and they're paying their own mortgage and they can paint their walls any colors that they want, we should look at it.
Oh my gosh, absolutely. And then the other people that we were talking about are the home buyers that have been sitting in their house for years, gaining equity over time, that are stuck on that 2, 3, 3.5, whatever percent interest rate when they're sitting on $200,000 in equity.
Right.
Oh my gosh, then they just have no clue.
Right.
Yeah.
Yes. And by the time they take the equity that they've built up over the past, however many years, they take that equity and put it into the new house, and then we take a look at multiple financing options. At least, whether they take the 50-year or not, at least they can see what the payment would be.
Yeah, and I think you and I were kind of talking about how in those, cases, those scenarios, it can even be like a conversation starter. It can be like, okay, well, you hear about the 50-year mortgage, and then you're thinking, is that right for me? I'm curious about it. And then you may have a conversation with Sherry, and go over all of the scenarios, including the equity that you have, and you may actually not even use it at all and figure out that something else is better because you have $200,000 to put down in equity on your home, and it puts your affordability level in, like, you're in a lot better position than you even thought that you could be.
Exactly.
Yeah.
I think that if a homeowner has been living in their house that no longer meets their needs for 1 or 2 years, or maybe even longer, then I think that they should at least be having a conversation with the lender and a conversation with the realtor just to see what their options are. I'm finding that when I reach out to my past clients, a lot of them feel like they're stuck. They get hung up on that interest rate and they feel like they're stuck. But then once they start talking about options, they realize, oh yeah, we can move into the house that fits our lifestyle right now.
Yeah, and usually it's that equity factor,
Exactly.
the equity. It's, the equity that people have earned over the past 5 years is really historically unprecedented. The equity that they are sitting on, and then they just don't even realize it because, real estate's typically the long game. You have a house and you're thinking, maybe 15, 20 years, I might be doing something. Maybe I can even pay off my house early. But yeah, I mean, over the past 5 years, especially in our market, like we were talking, all markets are different, but especially in our market, the appreciation has not stopped.
Right. You mentioned paying loans off early, and I think that that's one thing that I haven't heard on social media yet. Just because somebody wants to use the tool of the 50-year loan to get into a house and maybe do that move up or, stop renting, they don't have to make that 50-year payment. If we need to use that 50-year payment to qualify them for what they want and to get them in, they can always make a 40-year payment, a 30-year payment, a 20-year payment. There's always options that they can get.
Yeah, and that general rule of thumb is with the regular 30-year mortgage is if you take that monthly payment, you divide it by 12, you add that additional principal payment to
Right.
your loan, then on average you're saving yourself 7 years
Exactly.
in your loan.
Exactly.
That's just one scenario. Of course, a 50-year scenario would be a little bit different, but it's the same principle. You pay more on that loan, the more it goes toward paying that loan down, you're saving a ton in interest in anybody's loan type, no matter what you have. If you have a current house, you do what I just said, you're going to save a ton of money over time.
Exactly.
Yeah.
Exactly. And they're not stuck with the loan forever. We can always look at refinancing down the road. So just because they buy a house with a 50-year loan doesn't mean they have to live in that house for 50 years and keep that same mortgage for 50 years.
Right.
I mean, people just don't do
Like
that anymore.
7 to 12 years is the amount of time that they typically have their mortgage before they refinance, move, sell their house, rent their house out, whatever they're doing. 7 to 12 years is typically, the amount of time now. It's not our fathers, I guess,
Right. Our
real estate
grandparents.
industry anymore.
Our grandparents. Right.
Yes. So, how often do buyers miss out because their DTI is just barely too high? Would a 50-year term change that?
I see that more often than people think. I'm working with a client right now, and the price range that he really wants to be in, like everything that he goes to look at in this price range is perfect for him. And his debt to income ratio is 2% higher than what I can get approved through automated underwriting. And he doesn't have very much debt. I mean, he has one student loan, he has a low car payment, he doesn't have credit cards. So we're talking about a responsible person that's been in their job for the same job for 12 years. He's on the corporate ladder to move up, so he's, going to be having raises. He doesn't live outside of his means, but, to knock $100,000 off of a house can make a big difference. It can make a big difference in what you buy. So he's the first person that I thought of when I heard the internet explode over this is, this could be a tool that I could get him into the house that he wants. And he's a responsible person. So if he wants to make the 30-year payments, he can. We might just need to use the 50-year to qualify him. So it happens more than you think.
Yeah. So we're thinking responsible buyer, good credit, good income, not a lot of debt, like the normal kind of stuff that people have, and it's still hard for them to get into a house in the current market that we're at. I think that that's what this is trying to solve. And we were talking earlier, these differences in sales price can really make a big difference in property condition. So
Right.
had home buyers that have, been able to afford 20, 30, $50,000 more. They're
Hmm.
getting in on a house that potentially has a brand new roof, brand new HVAC, just like those big ticket items in their house.
Hmm.
And if you don't have those big ticket items updated in your house, and you have to update them within like the next 3 to 5 years, you potentially could be paying $30,000 to $50,000 out of your pocket in improvements in the house that you're purchasing if you can't afford a house that has those updated items. So
Right.
this 50 years, mortgage where people are saying the interest is a problem, you're not, you're paying more interest over time, and all of these negatives about it. If you are buying a house that has newer things, a brand new roof, HVAC, that type of thing, you are definitely saving a lot of money over time just being able to afford an updated house.
Exactly.
Yeah.
I'm thinking about another client that I'm working with who's selling his current home and buying a new home. And he's just, he has a lot of credit card debt. And it's not that he lives an extravagant life. It's just life. It's just life expenses and home repairs and things that he's put on the credit cards. So we've structured his loan where he pays off all of his debt, and when he moves into the new house, he's only going to have the mortgage. And, the mortgage is just a hair higher than what he's comfortable with on his set income. And this would give him an option to have a lower payment if he wanted to, and then he could always pay the higher payment on months that he was able to. So there's lots of options, when you're looking at this.
Yeah, for sure.
I have a question for you, Beth. So, from a buyer's agent perspective or a listing agent's perspective, what do you think the sellers are going to think about getting a 50-year contract? Do you think that that's something that they're going to kind of shy away from?
Well, I don't think that it would matter much to them. And I
Okay.
think a lot of it would depend on how it's presented to them.
Hmm.
And it is a hot topic. So I think as the listing agent, you would definitely have to be able to educate your seller on different loan types and what they mean.
Hmm.
To me, I would think that possibly it may look even better to a home seller, because if you're getting a loan over like more years, then it's potentially easier to qualify for.
Okay.
And it could actually be more of a slam dunk than a different loan type. So I think it just depends on how you look at it and how you educate your home buyers when you present the offer.
Okay. All right. Yeah, that makes sense. I mean, sellers really just want to know that the financing's in place and that it's secure and that they're going to be able to close so that they can close on their next home. So, um, you know, the term probably doesn't make as big of a difference as, some sellers might be a little hesitant about which type of loan is being written. So,
Yeah, and of
yeah,
course the
you're right.
lender, if it's Sherry Cash that I know that my buyers are happy with and they've closed loans with them over the years, and you have your reviews and the buyer does their homework, the buyer interviews the lender,
Right.
then I think that that's one part of it. And then on the listing agent side, you have a person that's like, oh yeah, Sherry Cash is a local lender. I've worked with her in the past. She's closed my buyers. I've been on the listing side with her before. No problems. If she gives her, you know, lender letter, pre-qualification, pre-approval, I know that they're good to go. So I think a lot of times that makes a big difference too.
Okay, all
Yeah.
right. Yeah, I think yeah, those are some great points. I know you spend so much time with your buyers, and you really spend a lot of time trying to show them properties that meet their needs. And you want them, you want to help them buy a property that really suits them and that they can kind of grow into. And I think that that's one thing that's missed is people buy a house that they fit into now, but but their life plan, they might not fit into it 3 or 4 years down the road. How much difference do you think that if we could free up an extra $300 or $400 a month and possibly bump that price range up? What do you think that that looks like for the buyer who's out there shopping?
Yeah. Well, I think, like I said before, I think with the home buyer, it actually might make them be able to purchase a home that's in better condition.
Hmm.
And I feel like that point alone just speaks volumes, because that's one of the biggest problems, that we're dealing with is affordability, property condition, the appreciation of the homes, which is great because you get equity. But if we're still having a supply problem, then, it still gives the seller a little bit of an upper hand when a
Right.
buyer comes and asks for repairs or asks for a seller credit or whatever they're asking for. So I think that this might actually help a buyer feel more comfortable getting into a home, and then have some of those things already built in. Like, where's
Okay.
my seller help? Do you have a new roof? How's your HVAC? What's going on with the property condition? Can I just move right in and not have to do anything? I think all of those things come into play, and it's going to be really helpful if it bumps up that affordability for them to be able to compete in
You,
this market. Yeah.
if
Yeah, I'm thinking.
you could qualify for an extra $300 or $400 a month and you were shopping for a home, what differences do you think that that would offer you as a home buyer to open up
Yeah, different
your?
things. Yeah, I think, when we're talking about value of a house, we're talking about property condition, which I've been harping on because I feel so strongly about that, especially with my first time home buyers.
Hmm.
Location, property condition, square footage, property, all of those things come into play. So it's
Right.
very, personalized, situational, and what they're thinking. Yeah, so I think it just depends on the buyer. If they have it opens up certain parts of the market for them depending on what's most important to them.
Right.
Because, let's face it, whether a buyer can afford 300,000 or 800,000, there's never the perfect house out there for them.
Right. Right,
So
exactly.
if we get that little
They're
bump up,
always going to have changes that they're going to make it their own.
yeah. So if they get that little bump up, can they get that second full bathroom that they really,
Hmm.
really, really want, so they don't have to share their bathroom with their children?
Right.
You know,
Right, exactly.
can they get a house that has a
Who
basement
tend to
or a
use it a lot
finished
longer.
basement? Oh, that's a big one. Finished basement.
Yes, yes.
Yes. Yeah. So those types of things will open up, I believe, for them if their affordability, they'll get more of what they want, of what they're looking for. It will probably open some doors.
So I think we're kind of on the same track with this. Neither one of us are having the meltdown about the extra interest that people will pay because we really don't think it's going to come into play over the long run. Because nobody's in their house 30 years, let alone 40 or 50 anymore. There's pros and cons. It could help someone qualify for that higher price range or help somebody get out of that rental or sell the home that they're in now and move up without that drastic payment jump. So there's pros and cons to it. Will that extra cash flow? Maybe that would pay for your child's traveling dance team or the traveling baseball team or lacrosse game. Those things are all expensive, and that's part of life nowadays. So I think that there's pros and cons to every loan option, not just the 50-year loan. And I think it's just important that when somebody's looking to buy a house, that they look at all the options and then back into I always say the two checks they have to write. The one that you have to write every month for that mortgage payment and the one that you write at closing.
Yeah.
So
Yeah.
it's
No, I
whatever
think,
financing option helps you meet those goals.
yeah, I think it's good. I think it's opening up some conversations, which I think is really important. I think a lot of people, when we have challenges, we've had supply issues in Baltimore anyway since prior to COVID. So I think being able to talk more about our issues and, our affordability, can we afford BGE? Can we
Right.
afford going to the grocery store? Can we afford the cost of living increases that have been across the board? So I think it's good to start a conversation about how we can make homeownership more accessible to more people. I think it's great.
I do too. Well, thank you so much for having me today.
Yeah, thanks for having a conversation with me. It's been a lot of fun. I love going back and forth and talking about these different things and our clients and what we can do to help them.
Me too.
Awesome. Thanks. Talk to you again.
Okay.